Hello and good morning, ladies and gentlemen. Here with Martin Panef, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session, Market Outlook. Starting with the North American markets. Yesterday, both major markets there, the Dow and the NASDAQ, major sell-off. Ended up on a doji for the industrial average. The NASDAQ lost about 16 points though. The Dixie index is up to 96.63 from 96.20. Hiking interest rates too soon could stall the US economy. This is what the IMF said yesterday, embellishing a prior call from the Federal Reserve to hold steady until early next year. The Fed should wait to move until it sees clear signs of wage and price inflation. The US ran a trade surplus with Canada in May for the first time since at least 1990, owing to less need for imported oil and a stronger dollar that makes it easier to buy foreign petroleum. Today, the most important event in the agenda is the printout of the FOMC minutes. We also have the building permits month on month in Canada, consumer credit change for the month of May, and the 10-year note auction. Basically, the FOMC minutes, we could say it's the major event, major trigger for the trading day. Moving along to the EU markets, the DAX 30 went 30 points down from a 250 points range. The French CAC 40 just 20 points down yesterday. Yesterday, German industrial production year-on-year 2.1% and 1.1% on month-on-month 0.6. Swiss unemployment rate as expected at 3.3%. Yesterday, major meeting, EU special summit. The Eurozone members have given Greece until the end of this week to come up with a proposal for sweeping reforms in return for loans that will keep the country from crashing out of the European currency. And of course, into economic ruin. Prime Minister Tsipras has until Friday to present the proposal, but German Chancellor Ms. Merkel said she hoped to have convincing reform commitments from Tsipras on Thursday, so she could ask the German parliament to authorize negotiations on the new aid program. She also said that this is not exaggeratedly optimistic for a solution. On Thursday, which is tomorrow, we're going to see the Germany trade balance numbers. Moving along to the UK markets, yesterday the FTSE 100 moved pretty much sideways, closed at 6,467 points. Yesterday, the sterling lost its value against all major currencies after gaining strength versus them the previous day. The National Institute of Economic and Social Research said they expect the Bank of England to begin increasing bank rates in early 2016, most likely coinciding with the February inflation report. Moving along to the Asian Pacific markets, starting with Australia and New Zealand. Basically, the banking there, they are further tightening lending to investors in residential real estate in order to cool the housing market. Trouble is that home prices there have increased 43%, especially in Sydney, since May 2012, amid record low interest rates fueling concern of a property bubble. With the turmoil in Greece, investors are selling New Zealand's currency to buy the UK pound. The euro dollar trade is no longer quite popular because of concerns Greece will leave the monetary union, hence boosting the sterling as investors seek havens. Australia's dollar, on the other hand, slumped to its lowest level in 6 years, something that we've been warning you about for the last 3 months. This is because of the central banker governor, Mr. Stevens, kept interest rates at a record low for a second month and said a weaker currency is still needed. To put a little bit numbers to what we're talking about, the cable 14 points down yesterday, 20-point range, 12 points down today. The pound versus the yen, 19 points down yesterday, 34 points range, going pretty much sideways today. Versus the Aussie, 12 points down yesterday, 22 points range, 15 points up today. So we see a little bit of a retracement there. The pound versus the loonie, 8 points down yesterday, 13 points range. And versus the Kiwi, 17 points down yesterday, 33 points range. Today, we show a little bit of a recovery, almost 10 points already. The pound versus the Swissy, 7 points down yesterday, 13 points range. We are looking at a budget report and house price balance as major events today. And tomorrow, Bank of England interest rate decision and asset purchase facility. Those are quite important events in the calendar. We would advise our traders to pay attention and tread carefully. Moving along to the commodities, the S&P 500 index had a range of 43 points, currently at 2,055 points. Gold had a range of $13 yesterday, trading at 1,150 now. Gold futures plummeted to a 3-month low amid a stronger dollar as widespread concerns related to the Greek debt crisis. Silver had a very interesting move yesterday, range of $1 per troy ounce at 14.8485 currently. The WTI had almost $3 range at 51.60 now. All futures steady on Tuesday after falling sharply a day earlier on worries about Greece's independence and China's stock market losses. Although charts indicated renewed selling could push prices into a bear market territory. U.S. crude oil production will climb to 45 years high this year before slipping next year. The U.S. output will advance 8.6% to 9.47 million barrels a day this year, the most since 1970s. This is what the EIA said today in its monthly short-term outlook. Their reports on the inventory are scheduled later on today. That was pretty much all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers.